Today the world woke up to a completely different map of global power. What began as a shadow war between Israel and Iran has now erupted into direct conflict. The escalation started after a series of strikes early Saturday morning. Those strikes targeted strategic military and energy infrastructure. Within hours, retaliation spread across multiple regions. The battlefield quickly moved beyond land and into global trade routes. Oil shipping lanes suddenly became military targets. The Persian Gulf turned into the center of geopolitical tension. Investors around the world reacted instantly to the shock. Financial markets opened with extreme volatility. The price of oil began rising rapidly within hours. Analysts described the situation as a geopolitical shockwave. The global energy supply chain is now part of the conflict. Energy is no longer just an economic resource. It has become a strategic weapon. The risk premium on oil jumped dramatically. In just 72 hours, oil risk costs rose by 12%. Governments began emergency economic meetings. Energy security is now the world's top priority. Panic buying started appearing in major cities. Gas stations saw long lines across multiple countries. Citizens fear rising fuel shortages. Global diplomacy appears fragile and uncertain. Political negotiations have largely collapsed. The world has entered what analysts now call the critical zone. The most critical location in this crisis is the Strait of Hormuz. This narrow passage is only 21 miles wide, yet it carries a massive share of the world's oil. Every day, over 20 million barrels pass through this strait. That represents roughly 21% of global oil consumption. Iranian naval forces have now declared the area restricted. Warships are patrolling the surrounding waters. Tanker traffic has slowed dramatically. Over 150 tankers are currently waiting outside the Gulf. These ships are unable to load or transit safely. 40 million barrels of oil are effectively frozen at sea. Insurance companies immediately raised maritime risk premiums. Shipping insurance costs surged by 50% in 48 hours. Alternative routes exist but are extremely limited. The Suez Canal cannot replace the Hormuz capacity. Saudi Arabia's east-west pipeline helps but only slightly. It can transport just 3.5 million barrels per day. That still leaves a massive deficit in supply. 17 million barrels per day remain exposed to disruption. Asian economies are watching closely. China depends heavily on Middle Eastern oil imports. Japan and South Korea face similar energy risks. Energy analysts warn of supply shock. Markets are beginning to price in severe shortages. Oil tankers now resemble floating gold reserves. Every shipment has become strategically important. Military presence around shipping lanes continues to grow. Global trade routes feel increasingly fragile. The world economy is now holding its breath. Because if this artery closes, the system stops. Oil markets reacted immediately to the crisis. Just days ago, prices were stable. On February 27, WTI crude traded near $67. By March 2, prices jumped sharply. WTI surged above $75 per barrel. That represented a 12% increase in a single day. Brent crude soon followed the same trajectory. Today Brent broke the $85 level. That is the highest price seen since mid-2024. Investment banks are now revising forecasts. Goldman Sachs released an emergency market update. J.P. Morgan issued similar warnings. Analysts now debate when oil will reach $100. Some expect it within days. Iranian production remains a major variable. The country currently produces about 3.6 million barrels daily. If production stops, the supply shock grows dramatically. Markets are preparing for worst-case scenarios. Brent could reach $120 quickly. Extreme projections reach $170. Such levels would reshape the global economy. Energy would become extremely expensive. Manufacturing costs would skyrocket. Industrial production could slow worldwide. The era of cheap energy may be ending. For ordinary citizens, the crisis is felt at the gas station. Fuel prices are rising rapidly across the world. In the United States, gasoline jumped overnight. The national average reached $3.11. Some regions face much higher prices. California already approaches $5 per gallon. Supply shortages could push prices even higher. Some forecasts predict $8 per gallon. Europe faces similar pressure. Natural gas prices surged sharply today. Drone attacks targeted energy infrastructure. LNG facilities experienced temporary shutdowns. Energy traders reacted immediately. European markets saw a 30% jump in gas prices. Inflation projections are rising again. The United Kingdom expects inflation near 4.5%. Central banks are worried. Every $10 increase in oil pushes inflation higher. Global consumer prices could spike dramatically. Food costs are also rising. Transportation costs are increasing everywhere. Heating bills are becoming more expensive. Households feel pressure on every budget. This is the economic double crush. Energy costs rise while purchasing power falls. Financial markets reacted with immediate fear. Investors rushed to reduce risk exposure. The S&P 500 dropped sharply during morning trading. The Dow Jones lost nearly 1,000 points. Technology stocks fell particularly fast. Nvidia and Apple both saw heavy selling pressure. Investors are moving money into safe assets. This is known as a flight to quality. Gold is the biggest beneficiary. Gold prices surged to record levels. The metal now trades above $2,300. The US dollar is also strengthening rapidly. Global investors seek stability in the reserve currency. The dollar index climbed above 108. However, a strong dollar has consequences. It makes oil more expensive for developing nations. Emerging markets face significant financial pressure. Capital flows are shifting quickly. Defense companies are rising instead. Lockheed Martin shares jumped sharply. Northrop Grumman also gained. Military spending expectations are rising. War often reshapes market winners. Investors are repositioning portfolios rapidly. Uncertainty dominates global markets. Not every industry suffers during crisis. Some sectors actually benefit. Defense companies see strong demand. Governments increase military budgets quickly. Emergency aid packages are being approved. Arms production is expanding rapidly. Energy companies also benefit from high oil prices. ExxonMobil profits increase with each price rise. Oil producers suddenly gain enormous leverage. Meanwhile, consumers feel the opposite effect. Airline companies face massive fuel costs. United Airlines stock dropped sharply. Delta Airlines followed the same trend. Higher fuel costs reduce travel demand. Tourism may decline significantly. Retailers face shipping cost increases. Companies like Walmart must adjust prices. Amazon logistics costs continue rising. Consumers will ultimately pay these increases. Grocery bills are climbing quickly. Families feel pressure across every expense category. Economic inequality can widen during crises. Some industries boom while others collapse. Market volatility remains extremely high. Investors must adapt quickly. Global supply chains depend on stability. The Strait of Hormuz disruption threatens that stability. Modern trade relies on just-in-time logistics. This system minimizes storage and inventory, but it is extremely vulnerable to disruption. 75% of Middle Eastern oil goes to Asia. Liquefied natural gas exports follow similar routes. China imports nearly half its oil through Hormuz. India also relies heavily on this corridor. Japan and South Korea face major energy risks. If the blockade lasts 30 days, consequences grow severe. China's industrial production could slow significantly. Global manufacturing may weaken. International shipping volumes could decline. Ports may become unusually quiet. Container traffic could slow dramatically. Trade flows may shift to alternative routes. But those routes remain limited. The global economy becomes more fragile. War disrupts commerce everywhere. Another concern is nuclear escalation. International inspectors released new reports today. Iran's uranium enrichment reached 90%. That level approaches weapons-grade capability. Diplomatic options are narrowing quickly. Military tensions are intensifying worldwide. Investors call this the war premium. Markets must price permanent geopolitical risk. Economists fear stagflation. That means high inflation combined with slow growth. Central banks face impossible decisions. Raising interest rates could damage growth. Lowering rates could fuel inflation. Economic uncertainty continues growing. The world stands at a dangerous crossroads. As of today, the global economy has entered the critical zone. Oil prices may continue rising sharply. Brent crude could approach $150. Investors must manage risk carefully. Consumer sectors remain vulnerable. Energy and defense may act as hedges. The US dollar remains dominant. Liquidity becomes the most valuable asset. Discipline and patience will matter more than ever. And in a volatile world, information is your greatest advantage.